Trade Genius.
Hey, happy Friday, everybody. This is Bob with Trade Genius. I have my good friend Phil and my partner here at Trade Genius. Say hey, Phil. And
Hey, Phil.
so what we're going to do today is, as the title suggests, we're going to talk to you about where we think Bitcoin can go. And I know title's kind of clickbaity, but we're not clickbaity people. We absolutely are going to show you the mathematical construct and equation behind why even $1 million might be conservative over time. And you have to bear in mind, remember, Bitcoin just is. It's a non-inflationary asset, and it's an asset that has a lot of utility, as we know. And so as the fiat kings start destroying their currencies in their quest to remain in power, it's going to empower Bitcoin to go much, much higher, and gold as well. And so, but we're talking Bitcoin today. And Phil put the math out there. But before we do that, Phil, you guys got some charts that people requested. Phil's going to go over those first, and then we're going to kind of go through the adoption curves and why Bitcoin is an asset you should own if you don't own it, and why you should have courage that the next move higher is likely about is upon us. So with that, I know I'm going to keep a really good eye on what you're going to say, Phil. So let's get rolling.
That's a big eye. Okay. Yeah. So we're going to run through charts real quick, but I implore you guys to stick around for after that. We're going to get into the nuts and bolts of this argument. So without further ado, let's jump into the charts. Okay, let's dive right into these charts. So basically, one thing I like to start off with is some of the things that are related to the price of Bitcoin, one of which is the dollar. And if you remember last time, guys, we talked about the dollar falling out of this parabolic curve that it was in. And so far that's playing out. Again, we're looking for generally this 108.70-ish area for the price to fall back to. We kind of thought that would coincide with a push up into the midterm elections and maybe a little bit past. So once we get this pullback to this level, that's where we're going to start to look around and say, okay, is this bear market rally done, or do we have more fuel in the tank? We won't know until we get there. But so far, this is playing out as we've been showing you guys over the last couple of weeks. The next thing I like to look at is the Qs. Now, I just left this drawing up because I wanted to see kind of like how was this going to play out based on what we kind of thought might happen into the midterms. The tech's been struggling, okay, and obviously this is a 2-day chart, but you can see like we were on track for that move up, and then we've pulled back quite a bit. Now, today was very volatile in the S&P 500, but we have recovered. One thing to note here on this pullback, we've got the heat down here, and when we see the heat pull back and get that solid color shading, that's when we look for a bounce. And so basically think of this as a spring that's been coiled and suppressed and it's ready to spring back the other way. And so this is actually a pretty bullish setup on the 4-hour, and this is what we like to look for. And again, this is the heat indicator. You guys can check out our specials on the website, tradegenius.co. Going into the Bitcoin chart, now this is an interesting move today because I think it's leading the strength into next week. Bitcoin tends to lead the markets both up and down, and getting over this 21,000 level, and really if you zoom out, there was a support and resistance a little lower here around 20,800, and this level is basically what I was looking for to get reclaimed, and we're doing that today. So as long as the weekend holds, I think tomorrow can be a really good setup. Remember, we're looking for at least this previous swing high up here toward this 22,700 level, looking for that to get tagged, and expect all of crypto to move up. So as I go through these charts you guys requested, I think most of them are going to follow this theme. I'll just show you some levels that you can be targeting. Now for Ethereum, very bullish pattern here to come back from the pullback and take it out and make a new high. So we're looking at targeting the 1790 area here. I think that's a decent upside target from here. And if we do get above that, then you can start looking at potentially probing up into this toward this 2000 level, but we're going to need a really strong squeeze on all risk on assets to get that move. So I think more conservatively, the 1790 area is probably the closer target to focus on. I got asked about LTC. LTC is interesting because it tends to be the thing that brings the close to a pump on crypto. I still think we got a little bit to go into the election on this, and we could see further on that. It depends on the net liquidity and stuff like that, which we'll keep you guys abreast of. But as it stands right now with Litecoin, if we can get a good pump, and we get over this. We had a weird squeeze wick over here, and I know it's a little bit hard to see on the chart with the range trader, but your immediate target's going to be getting back to that 80.50 level on that squeeze spike, and if we get above that, then figure trying to get to 94.25 on that, $94.25. Link USD. As you notice, we're getting toward the top end of the range here. Now, if we start clearing this area, especially this equal high up here around 960, we're going to have some free air to run up until about 1080. So this 1080 level on Link USD is, I think, where I would be looking for the top of this move as we break out. But right now we need to clear this 960 area. XRP is in play right now because we've got lawsuits pending. I think it's going to be a sell to the news event eventually, but you're going to probably attack this previous high up here at 55 cents or so. And again, similar to Link, you'll have this next area of resistance above us, probably back test this initial breakdown, and we'll see it try to press up into 60 cents. So I think that's a reasonable target for XRP. Doggy coin's in play too, because it's, I think the hype now is around Twitter and using it as a type of an integration play into Twitter, excuse me. So with that being said, it doesn't take a lot of demand, even though there's a ton of circulating supply in Doggy coin. The demand and the leverage now that this is on the different exchanges with leverage changes the game a bit. So I actually see this as a potential pennant up here, bullish pennant forming. And if so, we can break out. And if we do break out, if we look at a higher time frame chart, we can start attacking some of these areas that we had probed before. So, I think at some point you start looking at that round number up at 20 cents as an upside target. So watch for this pennant breakout, and 20 cents will be a psychological magnet. Matic, big strong daily breakout bar here, getting above this. So now you're flipping this 105 area is now support, and then we're going to basically target 134 is the most logical. Anywhere from 132 to 134 is your next logical upside destination here. BNB is also breaking out in a similar way, and I think we're going to go back to where this originally broke down from. So figure 399.20 on BNB upside target. Solana is basing. This is a very textbook bear market basing formation. So Solana can actually start breaking out quite a bit here. You're going to obviously be targeting the previous highs up here at 48.78. That's your first target for this bear market rally. But this is usually you get some really strong moves out of these basing formations like this. SXP, again, similar to Solana with its basing formation here. As we zoom in, I think you have to look at this 40 cent target first and then attack this original breakdown area of about 49, call it 50 cents is going to be your upside target on that. And again, this is all assuming we're going to run, this stuff runs up into the midterms and then some a little bit. And if things change, then we'll talk about where we might fall back to. And the last one on the list before we get into the meat of today's video is Badger. Again, breaking over this key level. So it should now flip this $3.55 level to support. Your next resistance point is going to be $4. And then above that, looking at $4.70. All right, so that's your chart rundown. So now we're going to get into today's video, the meat of today's video, and that is basically Bitcoin. Does it go to $1 million? Does it go over $1 million? And what I wanted to do today was show you how disruptive technologies kind of change things for humanity and how that adoption works and how Bitcoin relates to that and where we are in the big scheme of things when it comes to disruptive technology adoption. Bitcoin is disruptive because it's changed the way that we view things or use the store of value. Right now, the main usage for Bitcoin is gold 2.0, and it's extremely finite. So I think what you'll get from this is that there's not a whole lot really left out there to accumulate. Most people can still get their hands on one whole Bitcoin, but beyond that, it's going to be very difficult the longer we go on. And as supply dwindles, you guys will see that we don't have a lot of time left and price is probably going to go parabolic. So let's check out the details on how we get there. Okay, gang. So the first chart up here is basically how disruptive technology penetrates the market and how the adoption happens. And typically you're going to get what's called the S curve. So you have a flat, basically innovator stage where either the folks who invented the tech or just people that were early to the party and were willing to adopt this technology because they had the foresight to see that it could be disruptive. That's where they get in. And then through network effects, you start seeing the adoption phase pick up into the early adopter phase where you'll see this is still where we are with Bitcoin, even though it may seem like things are mainstream and it's on social media and things like that, still in the early adoption phase. And that's important to understand here. Then we get into the early majority phase. I mean, you could think of things like the iPhone, iPod, things like that. When Apple really started to explode, you could see these different phases play out. I think that's a pretty good recent example, other than maybe the internet. Then you have the late majority phase, which is another 40%. And then your final 10% is the laggards. And this is where you get peak saturation. These are where you get guys that said they'd never use a smartphone, finally have a smartphone on their hip. So, sooner or later, it just becomes a normal part of daily life. And so this is how you get disruptive technology to become totally accepted. This is the typical path in adoption. You go through a flat early acceptance phase, and then this hyperbolic growth and broad acceptance, and then finally full saturation, and it plateaus. All right, the next chart I wanted to show you guys is the different technologies that we see with this technology adoption curve. It's happened with automobiles, landlines, tablets, cell phone, radio, electricity, smartphones, more recently the internet, social media. So each one of these has a line represented up here, but you can kind of see that if you put a mean or a weighted mean on it, it all goes through this parabolic move straight up into broad acceptance. All right. And that's really what you want to be focused on here, because as we start getting more acceptance globally with Bitcoin, that's where you're going to be able to monetize that global acceptance, right? So you couldn't really buy internet, right? You knew internet potentially could be, an explosive growth technology, but you couldn't really buy a piece of internet. Well, I argue that you can do that with Bitcoin. So if you buy Bitcoin, you're buying into basically a disruptive technology that's going to change the way we do business as far as banking or as far as sending money, or just a store of value. There's all these different takes on what Bitcoin ultimately does the best thing of doing, but they're all plausible, they're all feasible, they're all being used in that capacity right now for Bitcoin. So the next chart I wanted to show you was, think of that S curve, okay? This is the foot of that S curve that we're seeing here. This is a percent of population, global population, that's using Bitcoin. Now, I know we have a nice arcing curve here, but if you look on the left there, we're only at just a little over 0.35% of the global population is using the Bitcoin network. Either on, basically we're looking at entities that are active, meaning wallets that are actually moving Bitcoin around. That's only 0.35% of the population. So we are nowhere near that parabolic growth and adoption phase. And we're at, basically in the middle between the low and the high of price. It was about $30,000. We're currently under that mean price. Think about that. And we're not going to go up in a linear fashion, price to adoption, right? It's going to be an explosive growth. It's not going to be linear. So you can't say, well, 0.3% of the globe means $30,000 Bitcoin. No, that number doesn't go up in a linear fashion. Okay. It's going to grow in an exponential way. So when you go to another 0.3% to 0.6%, it doesn't mean it's going to 60K. It's probably going to like 150K. See what I mean? And so quickly that gets out of hand. I mean, if you go to 5%, you're probably at $1 million of Bitcoin. And it comes down to supply and demand metrics. And Bitcoin's very interesting because it has a known fixed supply and it has a known inflation rate. And it's technically disinflationary, meaning that even though there is an inflation rate, it's declining every 4 years due to the programming of how Bitcoin is generated. So you can see we're just at the foot of that. Now, if you zoom out on this a little bit, boom, there we are. So this is a model using modeling techniques that looked at things like electricity and landlines and automobiles. You can model what the adoption curve is going to look like, and more importantly, what the price of each Bitcoin is going to look like on a chart. And so here we are, 2022. You can see that we still got time, but this might be a little conservative too, all right? Because I'll show you another chart coming up where the consumption, or basically the amount of Bitcoins that are taken off exchange, is accelerating. So this might even be conservative in time, but whether it's 2 years or 4 more years, the point of the matter is you have an opportunity to get one whole Bitcoin now, and you probably should, because this is probably going to go past $1 million at this rate. All right, it's just math at this point. And the hard part was getting over the adoption of even Bitcoin, right? Getting to $1 being traded was actually the miracle. Getting to $100 was the miracle. Once the cat's out of the bag, now you have an asset. It got to $1 trillion market cap. Okay, now the institutions are saying that, okay, well, now we have size we can play with. And that's what's happening. So The hard part's over. Now it's having the conviction to see that these models are going to play out, and you have an opportunity to get into an asset that actually will turn into a pretty darn good nest egg. And most people on this planet are going to, in fact, mathematically, very, 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 very few people are going to be able to claim that they have one whole Bitcoin in their holdings, because there's only a couple million left out there on the exchanges. And the amount after that isn't going to satisfy global demand for that kind of commodity.
Hey, Phil, if I can cut in here real quick,
Yeah.
one of the things that was really weird, and I think it's going to end up being a positive, is that, everybody is hodled this. They took hodling to heart, and we have one of the lowest floats ever for an asset. And I think part of that, notice it didn't go down when we should have crashed in Bitcoin. And it's also been keeping it from doing anything. And so I think the dollar and what the Federal Reserve doing is really been holding everything back. And I think that dam's breaking right now. And I think the fear in the market is the dollar and the euro fighting, or the dollar and yuan, or any of that. I think it's the dollar against these non-liability currencies. Everybody knows gold, right? But Bitcoin is on that same mantle.
Right.
And I think there's going to be a recognition event coming out when the Fed pivots or pauses that are going to cause everything to ramp, and it's just not going to stop this time. It's going to be different than 2011 for gold. It's going to be different than 2017 and 2021 for Bitcoin. These moves are going to be parabolic and incessant, and I think people are going to freak out that they're going to miss it, and people are just going to be throwing at it, and it's just not going to be available. And that's when you're going to see that exponential move that Phil talked about. And then the Lightning Network's going to help the adoption of people. I notice now, the Lightning Network's helping people, started to do transactions, more widespread. So I think it's a really exciting time. And then, me, I've always been very, very cautious on crypto, and the excitement is building on this thing. I think it's going to be one of those things you wake up in the morning and be like, oh, shoot, and it's going to be gone.
Yep, I agree with you. I agree. And, we have a couple more videos to do related to this. I think it gets into also where the miners become the new diamond cartel of the world's most sought after finite commodity. And that's worthy of another video itself. But yeah, it's creating some interesting scenarios that you guys as investors can profit from and shore up your portfolios with, for sure. The next chart I wanted to get into, thanks for that, Bob, is the technology adoption curve. So this is actually a forecasted technology adoption curve for Bitcoin. So again, it's whether it's another 2 years or 4 years, but before we start getting into like the 20th year of Bitcoin, we really starts to see this ramp up. And again, this, in terms of price, this could go far beyond $1 million. Okay, there's just, in reality, with lost Bitcoins and the first million, the Satoshi wallet, where basically it would appear that the initial production of those were lost for whatever reason, whether because of beta testing or whatever it was. We really only have about 16 to 17 million of float, majority of which is being held. And a lot of the wallets are fairly inactive, meaning they're holding on to it for the long haul. And really, I think that plays into pristine collateral plays, where it becomes so valuable, you can pledge it as collateral, pristine collateral, and there won't be a lot of people that will be able to do it in size. So if anyone owns multiple whole Bitcoins, you're in a very, very small club going forward. So this blue line is the forecast, the forecasted growth for technology adoption, whereas the orange is kind of the median adoption rate. So again, forecasting this out is giving you basically a best guess as far as at what point in time in the future. Keep in mind, we're at the 11, 12 year mark here. So it's basically telling us in the 18th or so year here, we're really going to start to see this thing ramp up in adoption, and then that's going to equal price too. So whether that's conservative or it happens sooner or maybe a little bit later, big picture, in another 5 years, you're going to look back and wishing that you were able to pick up Bitcoin at 20K or less. The last chart I wanted to show you guys is this issuance chart. So basically this golden line here, or this orange line, however it looks for you, is the issuance of Bitcoin. And as you can see, every one of these step downs is the halving, right? So we have another halving coming up that's going to step it down. Right now, we're in the phase where it's 900 BTC are being produced a day. That's the mining reward for securing the network. That's going to step down. It's programmed to do it every 4 years, and that output gets cut in half on a daily basis. So the next phase, or the next halving, is going to be 450 BTC per day into a parabolic S-curve adoption. You can kind of see where this is going. Okay, so basically the globe hasn't really, or the global population hasn't really adopted Bitcoin. We've already hit 70K. So imagine when it starts to really take off. Like Bob said, price isn't going to stop. It's just going to go parabolic like this S-curve. You're going to have a commodity follow an adoption curve in price. And we're not talking hundreds of thousands, we're talking millions of dollars when this is all said and done.
Yeah, these miners aren't going to do this for free. So, they're going to help drive the price higher too as the halvings continue.
Right. Yep. And what you'll end up having is, and that's actually a good segue for the next chart. This is a Glassnode chart. So black is the price of Bitcoin. So you can see we've had, these three distinct halving pumps or bull markets. And the gold line is the supply of Bitcoin on exchange. One thing you'll notice here, especially from the 2020 crash, is something changed and it started getting accumulated pretty aggressively and it hasn't stopped. Okay, we've basically been accumulating this all through this, not only through the top of this last bull cycle, but all through the bear market, which is a lot different than what we've been seeing. If you look at the last two bull market peaks, the issue or the supply of Bitcoin continuously grinded higher on the exchanges. Even the 2017 blow off, it was fighting this, basically Bitcoin being tossed into the exchanges. They were selling into that pump, and it continued through the bear market. Even what's a little bit different about here, this you can see we're putting in a floor here in 2018, right? And then we dumped. But you'll notice the supply of Bitcoin was going up that whole time and then really spiked on that dump. Whereas here we're putting in a floor. And look what the supply is doing. It's dwindling. In fact, we had another big whoosh down. I think Binance had like 50,000 BTC taken off exchange. So it's acting like as far as the supply goes, it's acting like we're in that point in time where we before we get that real big bullish move, but we're not. We're still in that bear market phase. So this is vastly different, and I propose that that's going to exacerbate the next bullish move. And I think we start to get away from these boom bust cycles. And we start getting into a more sustained rally. And again, this is a video for another time, but I think we got to show you guys how the gold market did that actually from the early 2000s to all through that decade to about 2011. And that started with the introduction of the ETFs. And guess what happened in the last year or so, right? We had ETFs introduced. And the last thing we're waiting for is a spot ETF. But that's basically going to help spur more global adoption with the Bitcoin network. So anyway, guys, I thought that seeing how S-curve adoption happens with disruptive technology and how the supply is actually getting gobbled up nonstop, even through the bear market, what this is probably telling you is that the institutional players are in here, right? They weren't so much in here before, but now they are. And the supply is getting gobbled up. Production is going down in April of 2024. The next halving, we're going down to 450 BTC per day. And they're taking Bitcoin off exchanges by the tens of thousands. So I think you guys are smart enough to do the math and see that this is an extremely plausible scenario of going not only to a million, but actually beyond. And most people are going to be able to wish that they had made the decision to allocate at least one BTC in their portfolio, because the price appreciation on that has immense upside. And not only that, you could probably pledge that as pristine collateral. You may never even ever have to get rid of it and use that as buying power, or you can loan it out to some of the more bigger institutional banks that want to, you can loan it out and get yield on it, for example, right? And meaning that they're a big institutional bank, the risk reward of them defaulting on that type of scenario is pretty low. So you may not even ever have to sell it. You could live off it like an annuity or something like that. Anyway, I think there's a pretty good case here for you to accumulate that in your portfolio. And that's all I really wanted to present to you guys today, was just how this is going to get to $1 million plus. And I hope that makes sense for you guys and you can benefit from that. And with that, Bob, that's pretty much wraps it up for what I have to say today.
No, it was awesome, Phil. I think you made a great case. And I look forward with trepidation at what the fiat kings are going to do to us. But, here you have a safe haven. So, I encourage you guys to do your homework and start accumulating this. It's still at bargain prices.
Agreed. All right, with that, guys, that's going to do it for another edition of the Trade Genius podcast. Thanks again for being with us. Please hit like and subscribe. It really helps out our channel. We'll see you guys on tomorrow's podcast. Bob, I hear we might be talking about the weather a little bit, maybe?
Yeah, you don't want to miss this one. It's going to be a lot of fun and profitable for you. And it's already making people money that follow us at Trade Genius. So make sure you check in tomorrow.
Awesome. And if you guys are interested in any of those indicators that we were showing on the charts, head over to tradegenius.co and you can get it there. All right, guys, we'll see you on tomorrow's video. Thanks again for watching. Bye-bye.
Trade Genius.